The story of America's $37 trillion debt begins with a mystery, one that challenges everything we think we know about money, power, and control. What if the largest financial crisis in U.S. history is already unfolding, but in a way hidden from the public? What if the government has no intention of ever repaying its debt, honestly, and instead plans to quietly erase it through inflation, digital money, gold positioning, and financial engineering? The real question is unsettling. If every nation must repay its debts, why does the United States, the world's richest and most powerful country, behave as if its debt doesn't matter, while simultaneously warning that it's a danger to the economy? And more importantly, how can a country simply escape a $37 trillion trap without anyone noticing? To understand this hidden strategy, we must first understand the system the United States built. For thousands of years, money was backed by physical assets like gold and silver. But in 1944, the world shifted into a new era when the Bretton Woods Agreement crowned the US dollar as the center of global finance. For decades, countries accepted the dollar because it was backed by gold. But in 1971, President Nixon cut that connection, and instead of abandoning the dollar, the world continued using it for trade, oil, banking, and international settlements. America gained something no empire had ever possessed: the ability to issue unlimited debt in the world's reserve currency and have other nations buy it willingly. Debt became more than borrowing. It became a weapon of influence, a tool of global power that allowed the United States to live beyond its means while exporting inflation to the rest of the world. The modern debt spiral began slowly. In the 1980s, tax cuts, military expansion, and new financial deregulation fueled rising deficits. In the 2000s, 2 long wars added trillions more. Then, in 2008, the global financial crisis hit, and everything changed. Banks collapsed, the economy froze, and the Federal Reserve began a radical experiment: quantitative easing, creating digital money to buy government debt and stabilize markets. This wasn't just a rescue, it was a transformation. From this moment onward, the U.S. economy became dependent on money printing to survive downturns. Then came the pandemic. The government printed more than $5 trillion in new money, more than it printed in entire decades. Inflation skyrocketed. Trust in the system weakened, and behind the scenes, policymakers began searching for a long-term solution to a debt so massive it could never be repaid. The answer was not in raising taxes or cutting spending. It was something deeper: letting inflation quietly erode the value of the debt, while increasing government control over the money supply through digital dollars and strengthening the financial foundation through gold reserves. Inflation is often viewed as an accident and unfortunate side effect of economic crises. But historically, inflation is also a government's most effective tool for shrinking debt without announcing it. When prices rise, the real value of money falls. This means the real burden of debt falls too. What costs $1 yesterday costs more tomorrow, but the debt stays the same in nominal terms. And when inflation is controlled just high enough to erode debt, but not high enough to destroy confidence, it becomes a silent tax on savers and an invisible weapon against national debt. But inflation is hard to control. That's where digital money becomes crucial. A central bank digital currency would allow the government and Federal Reserve unprecedented power: real-time taxation, direct stimulus, programmable money, and granular control over spending and monetary velocity. In a world where inflation is partially engineered, that level of control becomes essential. It's the difference between hyperinflation and manageable inflation. It's the difference between panic and stability. At the same time, the U.S. remains the world's largest holder of gold, over 8,100 tons. Gold doesn't generate interest. It doesn't grow. But throughout history, gold is what nations rely on during resets, currency collapses, or global transitions. When trust falters, gold becomes the anchor. And if the U.S. ever needs to rebalance its financial system, gold is the ultimate collateral. With debt now over $37 trillion, interest payments alone exceed the entire military budget. Foreign nations are slowly reducing their treasury holdings. The Federal Reserve is trapped. Raising interest rates increases the cost of debt. Lowering rates risks more inflation. The system is reaching a breaking point. Something structural must change. because traditional fixes no longer work. Cutting spending is politically toxic. Raising taxes is impossible at scale. Economic growth can't keep up, and default is unthinkable for the world's reserve currency. The only option left is transformation. As the world shifts away from the dollar through BRICS, alliances, gold purchases, and alternative payment systems to the U.S. has begun shifting. 2. Quietly. Strategically. Inflation runs higher than stated CBDC designs are actively researched. Gold remains untouched, and the global financial order is being restructured in ways the public will only recognize after it is complete. History has seen this before. Rome debased its currency to fund wars. Weimar Germany printed money to erase reparations. Argentina resets its currency every decade. When governments cannot repay debt, they turn to the same tools. Create money, control money, redefine money. The U.S. is doing all three, only with more sophistication, more global influence, and more subtlety. The key lessons are simple. First, America will not repay $37 trillion honestly. It will erode it through inflation, financial engineering, and monetary redesign. Second, digital money will be the most powerful tool of the next chapter, giving policymakers direct control over the flow and function of currency. Third, gold remains the ultimate insurance policy during moments of monetary transformation. But here's the warning. The biggest risk is believing the system will stay the same. In reality, it's already changing. Faster than most people realize. Inflation, digital currency development, global de-dollarization, and rising gold accumulation are not random events. They are coordinated signals of a financial system preparing to rewrite its own rules. The question is not whether America will escape its debt trap. The question is whether citizens will understand what's happening before the reset happens. And if you want to stay ahead of that change, if you want to understand the forces shaping money, debt, and power, make sure to like, subscribe, and turn on notifications. Because the future of money is being rewritten right now, and only those who pay attention will survive and thrive in the world that comes next.